What's going on? I'm Albert from Smart Investing. Welcome to the channel. Thank you guys for watching, listening, or tuning in. If this is your first time watching this, thank you for watching my video. I talk about a lot about the stock market. I don't talk about options or anything. I just strictly focus on stocks. Any questions, comments, suggestions, any feedback is welcome. Just please no spam. So before I begin, I want to state that I am not a licensed or insured investor. Any professional advice, please seek someone who is licensed and insured. The stock market does carry great risk and reward. So please consult a professional advisor. So today, I'm going to be talking about the banking sector real quick. This is going to be only 6 stocks. I'm going to try to run right through these real quick. I'm going to be using Webull. I'm using a stand-up tripod, so it might be a little bit different this time around. So please bear with me. Try to instead of me holding it. Okay, so here we go. I'm just setting up my settings there. So I'm going to be using Webull. If you haven't heard of this app, I use it for pretty much all my analysis. It's very accurate and very time consuming. There's so much to do on this, but I use it for fundamentals and technicals. So let's begin. I'm not going to talk about the market yet, but I think I'll do that after the banking sector video. That's what I do in my videos. If you don't watch my videos, I'll mention a few things of what's going on in the market. So let's begin about this banking sector. So the way I analyze stocks, I do them by sectors. I like to organize. I just don't talk about random stocks or random sectors. So basically, my goal on this channel is to cover as many stocks as I can possible and to basically do a fundamental analysis and a technical analysis, whether it is short and detailed or if it's brief. And I'm talking about whether, technically if it's short or if I go into detail or if it's fundamental and I talk about it short, or if I do it along, detailed explanation when I'm doing fundamentals. So either way, you still get a little bit of both knowledge from my channel when it comes to fundamentals and the technicals. And that's something you don't see in a lot of channels. Again, I'm not hating on other channels. I've seen other channels, but they're only good for so long. I've been doing this for years. So again, the reason I created this channel is because, I'm tired of hearing about the same stocks, the same popular stocks. Apple and the FANGs, Microsoft, Disney, Walmart, ExxonMobil. You hear all these companies, they're just the same popular companies. I don't do that. I rarely mention those. I go over as many companies as I can. And if you don't believe me, you could even scroll down in my channel, my videos. You see all those sectors that I'm going to cover. And that requires a lot of time on my part. And that takes, years to analyze. And I mean a thorough analysis to be very, very accurate. Because again, you have analysts that cover many companies and, that's where they're wrong because they're not putting in the work that I do. So again, everybody wants to be an analyst. Everybody thinks they know what they're talking about. But in reality, I hate to break it to you, but the cold, sad truth is a lot of people don't know what they're doing. They're not putting in the hard work to analyze and prepare for what's coming, even for an up market and a down market. I've seen it. I've done it. I've been through it. So again, my experience plays pretty well into the stock market. So I've seen it before. The stock market is not for everyone. That's just a plain truth. A lot of people think it is because it's It involves money. Anybody and everybody connects with money, but when it comes to investing, it's a whole different world. It's not really meant for everybody. I'm sorry to say, if you're actively investing, is what I mean. Because anybody can just save money, put it away, never look at it. But if you want to profit and you actually want to grow your money actively, then it takes work. You just don't set it and forget it. That's not um, really investing. That's just pretty much saving. So that's all I want to share my tip for today. I've said it before, but it's good to kind of repeat the same thing because people need to remember and memorize that you know certain things that need to be done. So, anyways, I just wanted to say that. So again, I'm gonna be looking at 6 companies. It's really 5, but number 6 was the one. No, actually, number 5 was the one that got bought out, and six on the number 6 one on this list is the one that took over number 5. So I have time for fundamental and technical analysis for this company. So again, we're doing the banking services sector, and we're gonna be starting off with. I just want to see something real quick. Okay, so we're gonna be starting off with the first page. So as we can see here, I'm looking at my first page. If you guys don't know what I'm talking about, when I do an analysis, this is my first page. All this information here. If you don't know how to read it, with time, if you watch my videos, you will learn how to read it. If you know some of this information, then hats off to you. I'm glad that you know. But there's always room to learn. If I don't know anything, you guys can also help me out as well. So, anyways, I see fundamentals and technicals on here. So the first thing that I like to look at, I don't really look at. It's not one thing that I always look at. I look at everything. Obviously, the price for a company, the price can say a lot compared to the 52-week high and the 52-week low. You want to see the difference of prices between that. So right away, for an experienced and active investor, I'm someone who's very, very active. So when I see those 3 numbers, so I'm looking at 1, 2, and 3. So when I'm looking at those 3 numbers, I want to see the difference between the low and the high, and where is it currently. Did it break new highs? Is it close to new highs? Is it close to new lows? Did it break new lows? Or is it in the same range? So even if it's in the middle, again, I'm looking at the 52-week high and low. It didn't break either. But what I notice is, so what's the difference between the low and the high? That is exactly only a $2 difference. So with a $2 difference for the year, that is not a lot of money. That is not a profitable company. I'm sorry to say. Even though it does show profitability, fundamentally in the long term, yes, it can be. And what I mean by that is long term, meaning if you buy this company and hold it over a year or more, who knows? Might go up, might go down. But again, one thing's for certain is that based on the price and the 52-week high and low, you're not gonna tend to make much money on this stock if you plan on investing in cheap stocks. So again, maybe later on in the year, who knows? More institutional investing, more big money might place some interest into it and might buy more shares into it and might make the price go up. But what I'm seeing as of right now, not the future, as of right now, towards the end of the year, I don't see it being uh, a growth stock or a really good income stock or a blend of it. I don't see it as a value stock either. I just don't see any potential for this stock. So that's my take on it. Again, not really active right here, really low volume. So market cap is pretty low. So the average volume the last 3 months, it's lower than its previous 3 month average volume. So that's not really good as well. So we have also, they are having positive earnings, which is good. They do pay a dividend, but let's see if they pay rising dividends. That's something that you always want to consider. I'm an active investor. I'm very experienced in this. I like to choose. I like to say that I choose pretty good stocks. But again, each decision is your own. Again, I can't recommend anything. If I like something, you still got to continue as to, again, I can't make recommendations. I can only say if I like it, if I do like it, and you do like it as well. The only thing I can recommend is for you to watch list it. That's it. I can't recommend any amount of shares to buy. I can't recommend any price points. I can't recommend any related stocks to it. I just can't make any other recommendations to that. Or if it's really good for a long-term buy and hold, or a short-term play, long-term play, or any of that. I used to give those recommendations, but again, it's because I'm not licensed or insured. So I just want to look out for you and for my best interest as well. So continuing about the information, again, it's only a $2 difference for the year. I don't see it growing anytime soon. I could be wrong again, but again, it's all about paying attention to the stock. If you see it on your watch list, if it's starting to break new highs, then then it breaks new highs. But again, one thing always to remember too is that 1 week does not determine a trend. It takes a few weeks to a few months, and starts building momentum and interest from other people, and buying opportunities and pressure for people to buy the stock. Then news starts to come into play, and then it just feeds on interest to the stock. And when I mean interest, I mean like popularity, liking to the stock. Not, I don't mean interest as in dividend yield interest. So anyways, let's look at the chart. Oh, sorry, I'm writing on my page when I'm trying to scroll. So the 5 year, it went flat, as you can see here, right in about March of 2021, dropped like a rock. Literally like half the value. I'm guessing, I'm not even looking at it. I'm not looking at percentages or price, just by the chart itself. Like, it just dropped half of that for the last 5 years. Like, that chart looks horrible. And you see those flat lines. You don't really see the spikes. I don't really like that. I like to see spikes in my trends and my charts and everything. Again, that's why I don't like the stock. So again, it looks like dead money to me, just to be honest. So moving on to the next important thing, some people like to look at this, but the analyst ratings, I could care less. When I first started, I used to look at them to get an idea. A lot of these analysts always recommending to buy. I'm not recommending anything. I'm neutral on it. Again, all these companies and platforms, they're always going to say buy. Like 90% of the time, they're going to say buy. That's because, they don't care about you losing money or not. So let's look at the chart for the year. We're looking at the support and the resistance. So as you can see here, I don't know if that's accurate, but that's just a guesstimate for a chart. It's just a good analysis to go by when you look at charting. So again, you see like a low and high, and then the chart like breaking into the support and resistance. Again, it's dead money to me. I don't see any breakouts, and those thin lines, they're just too small. I don't see any big rips or anything, which can be good. And again, maybe later on, like I said, earlier in the video, it might gain interest later on in the months, but as of right now, I just don't see it. This is like, this has to do with shorting the stock. That changes like week to week. I mean, when you short a stock, you know, you only have a certain amount of days to cover it. I've done it before on a sample, but in live action, I've never really shorted a stock. And even if I did, I'd have to pay fees on top of fees. Again, hedge funds do that. They can afford it. It's just insane amount of fees. I'd rather save my money. That's just me. I don't like spending extra just to get a stock. It's just too much hassle. I'd rather just take another approach and another strategy to it to gain on my perspective as to the way I'm doing my strategy. So obviously there's people who short the stock, meaning they bet on the stock going lower. So we're gonna look at the financials continuing this. So net income, they look like they've been doing pretty good, even for revenue and net income since last year. We have here, I'm just reading this information here. So it says total revenue of William Penn Bancorp is 23 million, but the median for the whole sector is 315. They're way below the middle, so they have a lot of room to catch up. We look at the earnings per share, what place they're in. They rank 385 out of 519. I can't say if that's a good rank or not. It just depends on the numbers. I used to like the Webull ranking and rating system, but it's changed so much. So I can't see the whole list, and it's harder to evaluate because I can't see the list and compare it. I could compare stock to stock when it comes to charts, but fundamentally, it's hard side by side to pull up, charts and graphs and all that side by side when it comes to it fundamentally. So this information tab, it's not too important to me. It's just a comparison sort of chart that I like to look at to see how it compares to other companies in the same sector, which is always good. You always want to compare how they're doing to their peers. And if they're underperforming or outperforming their peers, or even if they are in the middle or trailing their peers or starting to trail behind or ahead of their peers. Definitely, I always look at debt. Debt is like a major factor when reviewing a company. I don't say that, but I think I do mention it. So again, let's look at dividends. We could look at the financial details first. Sorry, I missed that before I even move on to the next page. So it looks like I'm looking at the earnings estimates. So I don't know. Again, they're missing their estimates, but they reported their actual results. It looks like they were missing the Q1 2022 and those three previous actual results for the earnings. So the information might be a little inaccurate because I don't know if it beat expectations or missed expectations or met expectations. Then they had the exact same number. What Wall Street analysts wanted to predict. So anyhow, the key indicators that we have here. Now I'm moving on to I'm still on the same page, but I'm just scrolling down as to what's going on. So we have here comparing the last 5 years. Well, I thought it was the last 5 years, but it's not. So I'm looking at this. I thought it was what is going on here? I must have an error somehow. I apologize, you guys. I apologize for that. It was just a technical difficulty. So I was looking at the last five. I thought I was looking at the last 5 years, but I'm not. Again, you can see 2020 here, and then this is pretty much outdated. And we're just gonna move on from that. So net income, it looks like they grew. That's good. Revenue, they grew. Operating income, I have no info. I hope I can find an accurate set of data to provide me that. And again, I only have 2020 and 2021, and it doesn't even say anything for 2012, 2013, or 2014. So that is too old for me. I think I like to look back at most up to the last 5 years. Anything beyond that, it's just like old news. That's just too far out unless it plays into a really, really big trend that's going on as of right now. Like for example, we're in a downtrend for this year. I guess Wall Street is claiming that we're going down for the year. Again, I've been bearish since 2020, ever since the pandemic. So, it's just because of bad news after bad news. Really, to be honest, that's just the cold hard truth. I mean, to be honest, what major news is good as of right now? What's good major news? I mean, inflation is sky high. Affordable housing is insane. The housing market is insane, insanely priced. The pandemic in some places is still taking effect in some places. Used car prices are insanely high. Food, gas is skyrocketed high. I mean, what major news is out there? I mean, again, we're all connected to money. We're all paying for the same amount of services and needs. So, I mean, really, what news is out there that's good? So, yeah, I mean, I've been saying it for the last 2 years. So, I guess now it's taking into effect. So, anyhow, the balance sheet for this, we have here for 2020 and 2021. I see. This is what I'm trying to decipher. It's because when I'm so used to looking at the chart and comparing, but then I see the last 3 years there, and it's like those first three bars are just like those years are just way off. They're way old. So their assets and liabilities, it looks like they grew a lot in 2020 and 2021. But I want to see how companies do in a down year for 2022. Let's see those numbers after 2022. Again, a lot of analysts are expecting downtrends. So that's all across the board, all across the market. Major news today. Just a quick update. Netflix. I think I mentioned this before. Netflix has laid off people. Who was it? Was it Salesforce? Anyway, some companies are laying off people. They're starting to lay off people. So a lot of these major marketed companies, all these major companies, they're starting to lay off people. So I mean, I'm not surprised, to be honest. That was pretty much expected in a down market. It's just a matter of how worse can it get, and it will get worse. I mean, that's just the way things are. It's just the reality of it. So anyhow, the cash flow, so 87 million. They do have cash flow. That's one thing that banks should have. They leverage their debt so high that they can loan out the money, and then they can actually get that money back on interest. And the way banks work too, always getting money back. They're highly leveraged, and then also they're good on cash flow for the majority of the time. So let's look at their margins. If I have nothing for margins. Their debt has been lowered, so that's good. Their cash flow is, let me see, it's negative it hasn't grown, and it hasn't stayed the same either, not even for year over year. So we have here for also 2021, their cash reserve per share has grown tremendously, almost 3 times actually. Wow. So that's the only good thing that they have for them, which is their cash flow. So that's my take on this company. And we're going to look at the rising dividends if they have any. They did pay a special dividend in 2021. In 2022, they paid a 3 cents dividend. So from 2020 to 2022, they cut their dividend by a lot. So maybe they were pretty good in 2021, but then in 2022, they're doing pretty bad. So that is my fundamental and technical analysis for that company. So next one up, we're gonna do it a little bit faster now. So again, 52-week high, 52-week low. So Toronto Dominion. I think I reviewed this company before, but again, if I do review a company again, either my list was like a part of the same page, and I happen to have 1 or 2 companies on the same list because it's just so many companies. And again, it's not a bad thing to review the same company because again, now we see an updated version of the company and see where it's at as of today instead of last month. So again, it's always good to review if companies are still good, whether it's the month before, 3 months before, and just to protect your asset, to protect your interests in the companies that you enjoy, that you like to invest in, or the ones that you think that are good, or for whatever the reason that you may have for your investment style, if it fits your needs. TD, I like it. I think it's a major company. You see 130 billion market cap. The difference in the 52-week high and low is pretty strong. It looks undervalued based on the fundamentals. And I mean slightly undervalued. I don't mean like majorly overvalued or undervalued. Sorry. Dividend yield is at 3.9. Looking at the chart, I think it still has room to go down. You want to play it out as of the way the stock market has been going. So expect more drops to come. We're going to look at the 1 year. So it still has room to go down. Let's compare it to the 2020 when we had the pandemic and even pre-pandemic. So we're going to look about right here, right before the pandemic. So it was about 50, in the mid 50s, put it that way, 56, 57. The low for the 2020 was about 37. So if it reaches the lows of 2020, I think that would be a nice range as to see where you want to fit in from there when and if it drops. And again, it's going to take time. So moving on to the analysis here. So we're going to see analyst ratings. Again, you have a mix of analyst ratings. I could care less. It's just a waste of time to me. You have the high and the average and the low. You have price performance numbers. You have a high, average, and a low. I mean, I could care less. If it drops, it drops. If it goes up, it goes up. I'm thinking it's going to go down by the way the market's going. Again, but you still want to be prepared to come in at a lower cost. So we're looking at the support and resistance chart. Has not broken resistance, but is way above the support line. So I can't really tell you the price for there. So the low point is it's looking at it's about 71. The middle of that. So let's look at the bottom for the year is about the low 60s. I'd say about 63. So when it gets around 63, that's the breakout point. That's when you want to see if it's going to go up or down. So once it starts breaking or starts consolidating and starts trying to figure out which way it wants to move in the $63 range, that's the time to start really paying attention to it. So moving on to the financials real quick. Let's just do that. I don't want to bore you and talk to you to death. So let's look at debt. This is pretty typical. So we're looking at the net income and the revenue. They're looking pretty solid. Again, this is a Canadian company. We're going to look at raising dividends. So they cut the dividend. They cut the dividend in April for this year. So this company is going through a little bit of a hit. And the weird thing that I see on this list, you can see right away also, they were paying Canadian, and that was the beginning of this year, but now they seem to be paying American dollars. I don't know the conversion rate. I don't know how much $1 is compared to Canadian dollar. It could be off by a few cents, or maybe 10 cents, 50 cents, who knows, but that change counts, every penny counts, as I like to say. The more money you save, the better habit you have. So that's always a good thing. So I hope you guys can be proactive in that. So anyhow, we have this year, they're paying in American money. I don't know if they done a partnership or maybe they moved headquarters into the US or who knows what. But from the time that I've known TD, they've been a Canadian company like since forever, like since 2016. So I don't know why that's going on as of now. So we have here they cut the dividend. So yeah, that's what happened. Moving on to the next one, TBNK. So we have here 52-week high and low. I don't really like it. PE is at 11.44, slightly low. Yeah, I'm coming. I'm coming. That's my daughter waking up from her nap. So this is a lower cap company. Earnings per share seem pretty good. They seem like they can cover the dividends as well. As you can see, those drops. You see those drops there for the last month. Highly volatile. So again, the difference between 52-week high and low, that's not much room to grow. I don't see it as a income style. I don't see this company good for income. That's just me. You see that drop for this past month, and then we're gonna look at the annual estimates and results. Stayed the same on revenue, and it looks like they stayed the same on net income. So we're gonna keep reviewing here. Let's look at the debt. High in debt. So that's pretty much it. They've been beating estimates, so which is good. The debt, again, slightly lowered the debt, but barely 1%. I don't have any margins. I wish I had net margin. So that's an important factor to me for the most part. Again, a lot of these major factors that I consider, they just remain flat, which is okay. But in a downturn, that's when you're really going to see if the company can survive. I saw the cash flow real quick. It looks like they're going down on cash flow. So that's not a good sign. So that's my take on it. It doesn't really look like they're doing too good or they plan to do too good. This is a special dividend paying company. They do not raise dividends from what I'm seeing. Do they have any splits? No. And I'm going to say no to this company as a watch list. I don't like it. But, maybe someone else might like it. even for long-term or short-term. But for me, I'm going to say no. And let's move on to the next one. So the next one up that we have is BLX. And this is a Latin American bank. So we can see here a difference of 52-week high and low of about $6 difference for the high and low of the year. Market cap is at 503 million. That's respectable. That is highly respectable. Almost a, trying to get to the billions, the first $1 billion company. As for their market cap, volume seems okay. It seems somewhat active. Their yield is pretty good. It looks like they can cover their dividend, so that's good. We're looking at the 5 year. It looks like they're going on a downtrend again, starting of the year of 2022. Typical for many companies. Analysis. Just look at the chart. Just like looking at the support, the chart on the bottom with the lines on it. I'm not looking at the one above, so I'm looking at the support and resistance chart. So again, it looks pretty flat. And what I mean by that is I'm looking at the beginning from here. And then if I was to draw a line at the low, it just towards the end of this line, it's pretty much in line with the same. So from the beginning to the end, it just looks flat. Yeah, it went throughout the whole year, went up, went down, but till now it looks like it's flat. So if you invested last year, you're pretty much flat. Again, that's just part of the market. It just doesn't coincide with some people's goals, and sometimes it doesn't. Some people chase yields, and some people chase total dividend payment. Again, I prefer total dividend payment. I do understand how mixing it with a few companies that do have high yield. That's a way to go too. But to each their own. There was a time when I first started investing, I did like a mix of them, but now to be smarter, I like to go for total dividend payments and companies that are actually stronger. Especially at a time like this, it's very, very risky to go for companies that pay high yields during a downtrend, because that way, if they go bankrupt next day or one day, 1 week later, all of a sudden they announce it, that's it. All your money is gone out of that stock, and it's hard for you to cash out, even if you try to take it as a loss. Even if you take even half your money out, it's just still, you lose all of it. So next one up I have is STXB, Spirit of Texas. So for the 5 year, oh, it looks like this did not trade at all today. So 52-week high and low of about $10. It's not bad. It still needs room to, grow and all that. To me, it's showing that it's undervalued. I'm not too crazy about this stock. I like bigger companies. But again, I'm doing this for you guys, and for me to obviously to have a history of logs of companies. Excuse me. So we have here. Let's look at 2021 net income and revenue. Revenue looks flat compared to last year and the year before, and then net income has been going up, which is good. So we have, let's look at the debt, really high. It's not surprising. So let's look at let's look at the support and resistance. So it looks like you're about to break even. And again, it's in a downtrend. So we have here financials. And let's look at the details for that. They grew their earnings, which is good. And then their indicators, let's see if we have margins. I do not have net margins. We have here debt to asset. And let's see net income. Net income is pretty good. That looks nice. Total revenue. Again, it looks flat. And then the operating income, that's okay. That's okay. I have net income. I prefer net income anyway. That's the take-home money after everything is paid off anyway. So we have 42 mil. So it's grown. It's grown pretty nice the last 5 years. Really, really nice. I think this is a decent company. It's not good or it's bad. They're doing something right. I think it has more positives than negatives. It's just that people are not paying attention to the stock. It just has no popularity, no momentum. People haven't heard of it as of much. The cash flow is decent. I mean, they're probably I wouldn't say negative, but they're pretty much flat, meaning probably at zero for cash flow. I wouldn't blame them if they're losing on cash flow in a time like this. And some way, somehow, some banks raise money. So let's see what they pay in dividends. Let's see if they pay rising dividends. So they have been. They start to pay in 2020. So in 2021, they started to go up 3 cents in 2022. So they went from 9 cents to 12. So that's good. They did pay a raise. So again, decent company. Nothing to really brag about, I think. But again, it's a respectable market cap at 446. I think that's respectable. But again, just the daily activity for this stock. I don't know. It's a fit. I never say this, but it's a 50-50 chance. If you want to watch list it, watch list it. If you don't, you don't. You know what I mean? I don't really care for it, but I think in the future, who knows? It might have some potential. So, next one up that we have is Sfnc. And I believe this is the stock that got bought out. As we can see here, yes, it is. So as we can see here, we have it. Oh, sorry, it wasn't this one. I think this was the company that bought it out. So let me back up for a second. So yeah, Sfnc. So Sfnc. So basically, this company is starting to go on a downtrend. We have here 52-week low, 52-week high of $10. The yield seems okay. It seems pretty active, and they're a $3 billion company, so that's pretty good. We're gonna move on to the next page, and we're just gonna see the revenues and income. So we're gonna look at that. So we have net income at 271. I'm just looking at the bars. Net income is flat. Revenue is starting to go up, then starting to roller coaster ride down. So you can see there. And then we have, let's look at the debt at 86%. Mixed results and reactions for estimates and actual results. So we have here, let's look at the net margin. If they have it, nothing. So ROE, return on equity, at about dropped slightly. That's not too bad. Dropped slightly for the assets. Return on assets. So earnings for each year pretty much flat. Not by much. It went up from 2020, But comparing to 2019, it's almost the same. And then let's see, net income. So for slightly went up for income, net income, and then revenue, again, the roller coaster, but I mean, it's okay. Company's okay. I could care less to watch list this or not. Can't really tell, so let's look at the dividends. Hopefully it can load. Apologize for that. So it is raising dividends by a penny. And that was pretty much it. WMPN. So yeah, that was the stock that I started out with. Sorry, I just mixed up my list. So there you have it, guys. Thank you guys for watching. Sorry it took too long. I just want to show you the fundamental and technical analysis. Again, I went over 6 banking companies. I hope you guys enjoyed the video. Like, subscribe, or comment. If you don't want to watch this whole video, I understand. There's a faster way to do that. The way I always like to recommend is when you go to settings and watch this video, go to playback speed, watch it at either 1.25 or watch it at 1.5 speed, and you'll have a better experience. And I know I'll be talking faster, but you'll have a better experience. I know it might be tricky at first if to hear everything and everything being laid out to you, but once you get used to watching the videos like that, you know, you cut your time even shorter. So instead of 45 minutes, you'll watch it in like half an hour. So thank you guys for watching. I'll see you guys in the next one. I'll try to make a video after this. I got to take care of my daughter. So take care, invest smart, and don't be scared of the market. It's normal. I mean, for me, it's easy for me because I've seen markets like this. I've been through them. I've seen them. What may be hard for you may be easy for me. So when you see markets continue to go down, you know, like, geez, I'm losing money. And then everybody talks about buy the dip, buy the dip, buy the dip. And again, that's only one of the many strategies that people do. And it just requires a lot of knowledge, patience, understanding, and interest into the market. You know, again, like I said earlier, the stock market, when you actively invest, it's not meant for everybody. If you passively invest, meaning, yeah, you throw a few dollars away and then, or you put it to the side, or invest in at least one stock a month, you set it and forget it, that's fine too. But if you want to just really invest, and I mean like actively, then that's a way to go too. So again, thank you guys for watching. I'll see you guys in the next one.